Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the USMJ sector. So a notable shift on Friday. We had APHA earnings. Check out the Canadian MJ video for some insight there. That has our short-term catalyst for the sector. It appears to have shifted things. A song that was playing in my head all day on Friday was "I Can Feel It Coming in the Air Tonight, night, 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 oh Lord," referring to the shift in sentiment. We'll see if it carries through. One thing that I'm looking at, we had an end of the day run up in a ton of the MSOs, and on the hourly time frame, you just see these big spikes at the end of the day. So the question is, what was that? What's going on there? And we have Canada closed on Monday. So whenever I see something happen on the chart, I like to look at things from a bull perspective, a bear perspective, and I imagine, if I had $10 million, if I had a hedge fund, and if I were long USMJ stocks, this is a spark of potential sentiment change from the Canadian side that's bleeding over into the US side of things. And it's also, again, a bit of relief. The S&P 500 has pulled back significantly the last 3 days. I've always been saying, what's going to happen to this weak sector when the S&P 500 starts to pull back? A little bit of a sigh of relief saying, okay, it's not going to be too bad. And that S&P 500 weakness is not done yet. We have to be cautious over there. But as of right now, obviously it didn't have a direct impact. But what I would do if I were a hedge fund with $10 million and I had a lot of long positions, if there were a lot of shorts open on the CSE in these USMJ names that are listed on the OTC in the US and the CSE in Canada, and I knew Canada was going to be closed Monday, what I would do is I would spring a bull trap, or I would be a bull and spring a trap. And I would run these names into the end of the day, the last hour, catch everybody by surprise, get that bull momentum going into Monday, and then keep that bull buying up on Monday and essentially try and get a little bit of a short squeeze going, knowing that those shorts would be unable to cover on Monday. So if these names go another 5% plus on Monday, come Tuesday morning, a lot of shorts are going to be in a lot of pain if they didn't cover here at the end of the day today. That's going to be a 10% plus move on a lot of names in just a short amount of time. So I have no idea. That's complete speculation on my part, but we'll see if Monday, if we get some follow through, it will put pressure on anybody that's short on the CSE that cannot cover on Monday. So kicking off here, doing our usual rundown, looking at GWPH. And GWPH, this is an example where I am glad that I stuck to my stop loss. I was entering, looking for a weekly higher low. I ended up getting stopped out right here because my stop level was below 169.27, and I could look at that and say, oh man, I wish I didn't get stopped out, because the next day we saw some bull move and a higher high. In the end, I'm very happy that I got stopped out because here we are down at 155. So again, keeping to the trade game plan and limiting risk, while sometimes it can go against you, many times it keeps you in control. And now GWPH, with the market weakness recently, is a much different looking chart, and the bulls have to be cautious of the head and shoulders pattern here with the left shoulder, the head, and if we hold 151.32 and we bounce on the weekly, we have to be cautious that it just might be forming a right shoulder. So that's now a much less bullish looking chart. Back here it was very healthy consolidation just under the all-time high, and now it's a bit of a different story. So bulls have to hold 151.32, but then we'll be watching for the potential right shoulder to form. IIPR is going to get interesting. I'd like to see a green day on Monday to get this range to tighten. 98.50, essentially a double bottom now holding, and 110.52 is our most important short-term resistance. So we could trade within this range for another few days, and this tight range breaking bullish would be the indication that our weekly higher low has been established. It's absolutely worth watching for that because this chart on IIPR's weekly time frame is still just fine for the bulls. The red volume is definitely a short-term red flag, so we always want to protect any trade. But if this pattern does break bullish, the play here is either bottom fishing 98.50 support or looking for a bull move over 110.52 to get a bit of follow through. And we will be watching close next week to see how this tightening range plays out. Curaleaf. So I entered Curaleaf. At this point in my personal portfolio, I have IAN, OH, Curaleaf, and TRUL. I entered TRUL on Thursday. I entered Curaleaf on Friday in the face of weakness. And my game plan for both TRUL and Curaleaf was to scale in looking for the daily higher low. The bounce and the momentum shift from the bulls was enough to make me confident that daily higher lows were going to form. So using smaller positions, because there's a wide range to be playing within, I entered, and I traded on the US names. So again, my numbers aren't going to be lining up. But I entered into the weakness on Friday, and for Curaleaf, my game plan was, let's say my entry was about $10 on the Canadian side, enter at $10, and I would scale in a second position in the mid $9 range, and then play based off of the $8.97 support. So looking for that higher low, I would have scaled in. I only got one fill, but where I stand right now with my portfolio, I have plenty of USMJ exposure, so I'm not going to be adding. It was just the trade setup where if I only got one fill, which I did for both names, that's just fine. If we see continuation from here, I'm certainly going to be one happy camper, and it's not the maximum position that I was willing to take, but it's good enough for me. So for the bulls to change this trend on Curaleaf, again, we have our equilibrium that's setting up where we have, wrong drawing tool, but we have our bull move, higher low, lower high. This is now looking like our higher low, and if the bulls can come out and break 1045 on Monday, that will be a clear higher low established at 991. And at that point, my trade game plan completely shifts. I would then potentially just put my stop under 991 and have a very low risk level and not look to add another position, because if we were to see a bull move up and then break that support, that's a big red flag. That tells me that's not the equilibrium that I was looking for, and it would be an equilibrium bear break. And otherwise, if we see a bull break of 1080, we're going to be looking at a daily trend change, and 1103 will be the next resistance, the top of that move. So keeping a close eye on Curaleaf and all USMJ on Monday, and watching for a bit of follow through. And again, the end of the day momentum came out of nowhere in the sector, and you'll see it on a vast majority of individual names on the US side of things. Canada was strong too, but for me it was notable on the US side because a lot of the US names weren't really doing anything most of the day, whereas the Canadian names did have a strong morning thanks to the APHA correlation. So let's see if we get continuation of this move on Monday. TRUL, I did the same thing. My first entry was probably down, lining up with about 13.18, 13.20 on the Canadian side. I would have entered a second position down in the mid $12 range, playing based off of 11.77 support. Only one order got filled, and now we're looking at if the bulls can break 14.18, that is perfection as to what we were looking for to take place. That's our inverse head and shoulders pattern. If we can get over that level, and of course after 14.18, we want to break 14.62 shortly after to confirm that breakout. And again, we're watching the daily exponential moving averages, the 12 and 26 period. And if that bull break does occur, they'll be looking at their first bull cross since we had our bear cross. And again, this is the kind of setup where we've only had one other bull cross in the history of this stock trading, and it resulted in a very significant follow-through move. So let's see if we can start our monthly higher lows in this sector, and then we would watch to see if that means monthly lower highs are coming into the fall, or if the bulls would be able to make it back up over 2165 one step at a time. Change the daily trend. We'll zoom out and start watching the weekly time frame. 1517 would be the holy grail. If the bulls can break that level in the next week or two, it would be very notable for the momentum shift being on. IAN. So IAN, I've been in a long position in IAN ever since I had MPX shares that converted over, and I've just been trading it and continually lowering my cost basis. So my biggest positions are IAN and OH, smaller positions for TRUL and Curaleaf because only one order filled. But again, exposure is significant enough that I am very content. And the question now is, can the bulls confirm this inverse head and shoulders pattern on the 4-hour time frame? 395 resistance, 391 resistance, break 391 and 395 on Monday. And again, we're going to have to use, next week, we're going to have to use the US charts on the OTC because we're going to have less information on the Canadian charts, and the levels that we're going to be watching, of course, are on the US chart. So key resistance of 391 and 395, and if those levels break, we'll have the first bull cross of the exponential moving averages on this 4-hour time frame in 4 months. So again, notable for something to happen for the first time in 4 months. That shows us the momentum shift that we're looking for. On the daily time frame, exponential. On the daily has been resistance for a very long period of time. We're looking to potentially close over them. And again, if we get a bull cross, it'll be the first time we've seen a bull cross since the bear cross long ago. And every time we have seen a bull cross in the past, which is not often because the history of the stock is not too significant, but it has resulted in some nice follow through. So we're watching for these crosses, we're watching for daily trend changes, and we're on the cusp of getting these daily shifts in momentum, keeping in mind that the weekly time frames on a lot of these names, even if we break 395 on IAN, we're just looking for a weekly lower high. The last clear weekly lower high for me is still 820. Every week was a lower high. We did see one little week here by 1 penny with a higher high. But essentially this previous week is the first time we clearly broke the pattern of a lower high every single week. So again, we know a weekly lower high is going to form on this bounce, and we would have to change the weekly trend for a more prolonged shift in sentiment to take place. Pretty much if we can change the sentiment on the daily time frame, get a weekly bounce going, and then of course any bullish news with any States Act or anything like that would significantly kick things off for the sector. That's the big unknown. To get the move that we're looking for, we can get nice 20 to 40% moves without the news. We need the government. The government has to do something for us to get the move that we're looking for in terms of the next explosive hype cycle. And that can take any amount of time. So we have to be aware of that and ideally positioned in green positions with break-even stop losses, if that is our game plan, waiting for that news to take place. So again, 395 is the level on IAN. MedMen just grinding, trying to hold 260 support. Anything under 294 is just a daily lower high. Bulls have to hold 260 and break 294 to give us a weekly higher low. And if the bulls are able to pull that off, we'll have the equilibrium here and we'll look for a lower high compared to 362. So all about that daily lower high resistance of 294. CWeb has just been a shining star for both sectors, both sides of the border. Everybody wants their chart to look like CWeb because we have a weekly trend change on huge increasing bull volume. We're looking back at the all-time high. The all-time high right now is only 18-20% away, which is nothing in this sector as we've already bounced 100%, essentially almost 100% from the low. That's what everybody wants to see happen. It started with a daily trend change. There's your daily trend change, and it ended with a weekly trend change, and now we're very overextended. Certainly no bullish entries at this point, but bulls extremely comfortable. And we know that when we do lose the hourly uptrend, we're just going to look for a daily higher low to form. And the pump that did take place on Thursday, it looks like that was due to someone in Motley Fool recommending it as a buy. Anything on the hourly time frame for me over 23.77 would be a higher low. So the hourly uptrend is comfortable for the bulls. The daily uptrend is comfortable for the bulls and positioned so well that if the sector does reignite, CWeb is certainly shaping up to be the first to hit all-time highs. OH. So OH is a daily inside bar. And if this inside bar breaks bullish by getting over 717, we will then have our daily higher low set as the bulls are attempting to change this trend. We have the low, high of the bull move, trying to make 675 our higher low. And if we can break over 758, the daily trend will change and we'll be over the daily exponential resistance for the first time in a very long time. That will be notable as well as far as the shift goes. So for me personally, I played protective, and this is something that a lot of people psychologically struggle with, newer traders, where I sold OH to lock in profit in one of my accounts. I have it in a couple accounts. I sold it in one account at, I'm going to use the US names so I can get my numbers right. So I sold it at 5:35 in the morning, and that's because we had a decent little start to the morning and we were looking for a 4-hour higher low to be set. And that move puttered out a little bit. And I said, all right, I have a decent enough exposure in the USMJ space. I'm going to lock in this profit where I have it. We got up to 541. We started fading. I sold at 535. Now, I rebought that exact same amount of shares at the exact same price, and it's a completely different scenario. When I sold it, it was on a weak bounce, and we were heading down to support. And when I rebought it, we had a bull move across the sector into the end of the day. I saw, okay, something's clearly up. Bulls are pushing it here. We know the Canada is closed on Monday. That was in the back of my mind. So I essentially paid $9 in fees, both buying and selling $4 and whatever each way. And that cost me the comfortability of making sure that I was in the trade, exiting the trade on the way down, and in the trade on the way back up. So a lot of people struggle to rebuy, and there are times where I'll do the same play and I'll rebuy higher and have no problem because the chart setup, the psychology of the sector, it's different. It's not the same as it was Friday morning as it was Friday afternoon. So very comfortable rebuying at that same price, knowing that this shift is on. And now the question is, how much follow through can this shift get? And can the bulls break 578 early next week, ideally, to change that daily trend? CL trying to bounce. Anything under 1120 is just a lower high. And CL, unfortunately, has a lot going against it in the sense that if anybody's going to be playing this USMJ bounce, it makes more sense to play OH. Because playing OH, you're essentially playing CL with a premium. You're getting paid. Where if we get any kind of headline that's bullish about the deal going through, we're going to see a big time spike up in OH relative to what CL is doing. And it really doesn't make sense, if you have a reason, aside from long-term investing, but any short-term entries, it doesn't make sense to me to enter CL as opposed to OH. And if you have any logical reason as to why that would make sense, by all means share in the comments, because that's a perspective that I don't understand at this point, and I'd be happy to try and understand it. But a daily trend change would be needed, and we don't have a daily trend change underway at this point. GTII is looking for the daily higher low to be found. Double bottom at 1217, 1220. Bulls have to see a break of 1285 for us to be confident in calling this our daily higher low. We have the low, high of the bounce, higher low, and we need the bulls to break 1285 for us to then call that our higher low and be looking back up at 1368, trying for the daily trend change. Harv, nice day. Nice solid bull day. This is a choppy, unclear chart, but momentum is shifting with everybody else. So the next clear resistance level for me is 789 and then 840. Same thing with the exponential resistance now becoming support. That's the first time we've closed over both of these exponential resistances in the last 3+ months. So if we see this follow through, we zoom out on the weekly, and weekly, anything under 1376 I would consider a lower high. So again, we know weekly lower highs are coming, and we have a perfect example of CWeb, where CWeb saw a significant pullback, and we said, man, is that it for the bounce? Are we going to fade? Nope, just a weekly higher low. So if you're looking at historical reference and saying, what do I want my chart to look like? What's it going to look like when we do have to consolidate on the weekly? CWeb is your visual guide. KSHB, daily inside bar. So KSHB is trying to shift momentum just like everybody else. The weekly time frame is closer to a trend change. And you could say the weekly trend already changed back here, and I wouldn't argue too much with you. But 429 is our new support level, and if the bulls can break 541, it will be notable. Again, these monthly time frames, keeping a close eye on them, and actually KSHB is probably one of the least clear monthly time frames in the sector. So I take that back. Don't care about the monthly on KSHB as much. But if the bulls can see this daily inside bar break bullish, and if we can make our way back up to 541, that will be a significant follow-through move for the bulls. CVSI, falling wedge shape here. Let's draw this out because we have so many falling wedges in this sector. That is where I would put my support line, and assuring that no candles are closing below it. And resistance line, same thing. No candles closing above it. And we're close to a break here. And as far as price levels, what the bulls would need to see for a break, if we can get over 416 and then the 435 would be a big win. Again, look at the exponential moving averages, trying for the first bull cross in many months. And if we can get over 416, we'll be on our way to that bull cross. And 435 breaking would just be a bonus. Let's see if the CVSI monthly equilibrium is still intact. So high, low of the pullback was 301. Lower high at 659, and now trying for a monthly higher low. Things are getting real tight, and trying to make our way back up for a monthly higher low to form 387 compared to monthly supports at 333 and 301. So we can see what the bulls need to pull through for all these charts, and now the question is, can they follow through? NBEV trying to change the daily trend. Low, high of the bounce, higher low is now 350, and the bulls need to see a break of $4 to confirm that trend change. And again, looking at the longer term perspective, the monthly time frame, equilibrium. High, low of the pullback was 303, lower high and higher low 335 off of that level. Let's see if the bulls can stay in this monthly equilibrium and change this daily trend, getting over the exponential resistance, which the bulls have been struggling to do for quite some time. It's right there. Bulls just have to reach out and grab it. PYX. So PYX is looking like it's going to need an inverse head and shoulders type setup to see a shift in momentum as well, where if we top out and cannot break 1635 resistance, we'll have to pull back and form a higher low and then change the daily trend and see a more complete shift. Looking at the weekly time frame here, it looks like a monthly equilibrium as well. High, low, lower high, anything above 1130 is a higher low, and the bulls are trying to form that higher low at 1255. Don't lose sight of the monthly uptrends, keeping in mind that IAN has lost its monthly uptrend. That alone makes me more skeptical of IAN than other names. So burden of proof for me is higher on IAN for the bulls to right this ship, because if we look at the monthly time frame, IAN is notably weaker on the monthly perspective than the vast majority of US MSOs. That lower low is very notable, and to see a move back up over 820, it's going to take a lot. So monthly trend change is needed on IAN, and that's not the case for the vast majority of individual names in this sector. So even though I might like IAN fundamentally, I cannot disregard what the chart is telling me, and I have to make note of that. Where are we? ZYNE. Bears still in complete control here. No sign of a shift on the daily. We lost the weekly uptrend. So now we zoom out to the monthly, and we're looking for the monthly higher low to form. And we'll need a monthly trend change. So pretty much just watching the daily downtrend, for me, anything under 1248 would be a lower high. That's the last clear big bull attempt that was rejected. And as far as support goes, not a ton of support down here. 967 and 957 are the only nearby supports. So the bulls want to see a scenario where we break the weekly trend, we lose the weekly trend, and don't get much follow through, because that is when we look at the potential of a flag and healthy consolidation on a longer term time frame, which would be the potential for the monthly chart if bulls can hold that 957 level. So pretty much hold 957 and healthy monthly consolidation can remain intact. If we start to drop down under 957, that may change. CXXI, so these low cap names, absolutely worth keeping an eye on. Again, if I were looking to be really aggressive in this sector, I would absolutely have a portion of my capital designated for these high risk, high reward names. I'm not in that instance, so I'm not going to play these lower liquidity names, but that doesn't mean that other people shouldn't keep an eye on them. Little bit of a falling wedge type channel there. So the bulls are trying to change the trend by holding support down at 76. And if we can break 94 and 106, the trend change and shift will be on. It's very due. And we're looking at weekly resistance of 106. So that would break the weekly lower highs if the bulls could get over that level. Again, exponential moving average crosses have not happened very often, and the bulls are hoping to pull that off. But we have to change the trend and break these two resistance levels to get that going. And if the sector sentiment shifts, these little names are going to shift as well. So CXXI and Tilt, both in the same boat. Inverse head and shoulders trying to pull off here. Bulls have to see a break of 104 and 112 to get that shift going. Again, very overdue. Let's see if that happens. And it'll also be notable where if these little names do break out, that's going to give me more confidence in the sector as a whole, because these are the highest risk, highest reward names. And if bulls are getting back in them, and if we see these bear exhaustion patterns of falling wedges, which are lower lows with no follow through, so a bear break by a penny with no follow through, that shows us bear exhaustion. And if there's bear exhaustion going on in these low caps, then there's bear exhaustion going on across the entire sector. So very interesting day on Monday is coming, and follow through is needed. It's still, we're not in the clear. We are not out of the woods, and it's up to the bulls the first couple of days this coming week to really finally get those breaks where we say this is what has to happen for the bulls to shift momentum and to see it finally follow through. I mean, we've seen this now maybe 3 times in the last few months where we've said this is what has to happen. Bulls are trying for the shift and they've failed to do it. So it's possible we fail again. If we see red to start next week, it'll be a big letdown, but always watching for the end of summer shift to take place. Appreciate you watching. Have a good rest of your weekend. Do good things out there. and I'll see you all Monday. So looking at some of the perennials that I've planted over the past couple weekends, we've got some figs and some raspberries and blueberries and more raspberries. These figs are a hardy kind and they'll only end up being about 5 feet tall, more of a bush. And we'll look at some of the bigger ones here in just a second. But the process of what I did is I just dug a hole and then I took that soil and I would put it in the raised beds. So now the raised beds have a bunch of different colored soil from all over the property with different mineral makeup and all that. And so I would dig the hole, I'd put some manure in it, I'd put some organic fertilizer in there and put the plant in there, and then I would make little moats because we're on a little bit of a slope here. So I made a moat in the back of the plant where water will pool as it comes down the hill, and then in the front of the plant I made a little moat as well, and then I lined it with rocks. So right in under here I've got little rocks all lined up to help catch that water as it moves down the slope. And then I put some cardboard down to cover the grass up, and then covered the cardboard with wood chips on everything except for the blueberries. I used pine needles on the blueberries because as that breaks down into the soil it adds acidity, and the blueberries like acidic soil. So we'll go look at some other ones that I did. One fig among the ornamentals. We've got this tree starting to flower as well. Still working on the raised beds. Haven't done a whole lot on those as I've been working on the perennial planting. Another couple blueberries here. One of them produces pink berries, which I've never seen before, so that'll be interesting. And this is next to the raspberries and the grapes up there. Over the winter I'm going to cover this grass here that's overgrowing with cardboard and snuff it out, and maybe put strawberries there for next spring. And then I got 3 figs. These are going to be big trees. These are going to be 20 feet high when they fully grow. So more figs, and I used some rocks that I found from around the property, some really cool sandstone and different colors. And I put the bigger rocks, again, I did the same thing with the bigger rocks and the smaller rocks underneath the mulch to catch some of the water on this slope. And some more, did some blueberries, and then here are these small figs that we did a couple weeks ago. They're starting to get their new growth. And more blueberries, and I planted them here as there's a split in the trees, so hopefully they get enough sunlight. And I just found a hawk feather. That's that. Got a cedar swing set up. My buddy Casey helped me put that together. So a spot to hang out in front of the pond and chill with the ducks.